Hello, YouTube. We're going to have some earnings analysis for you. Going live on Facebook. All right. We're good? Live? Ladies and gentlemen, welcome to an exciting earnings week. We're going to look to take advantage of it in so many ways. For tonight, we're going to start off with the earnings that are actually going to be reporting on Tuesday. That's going to be Biogen, Harley-Davidson, Hasbro, Lockheed Martin, UPS, and Skechers. We're going to go on a deep fundamental analysis. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. I'm going to go on some fundamental analysis of some of the earnings names reporting, and I'm actually going to, on top of it, despite the title not showing you, tell you exactly how I'm going to trade it, and short of some Christmas miracle, make a ton of money off of it. So I'm going to show you exactly how I'm going to do that, how I take advantage of these things, how I trade these things. But first, by watching this video, you are agreeing to hold Mark Melnick and T3 Live harmless and not responsible for anything shown, portrayed on this video. Okay, let's get right into it. So we're walking into a very, very, very exciting earnings week. We have names like, Logitech reporting, Procter Gamble, McDonald's, UPS, Chipotle, and I just really, just went basically till Tuesday here. We have Boeing reporting, Caterpillar reporting, FCX, Eli Lilly. I mean, it's just going to be an all-you-can-eat buffet of awesomeness for people who are looking to take advantage of these things. Now, it's kind of interesting because I have a very eBay's reporting, which wait till you hear what I have to say about that. Throughout this entire week, I'll be giving you my fundamental analysis on these earnings names and just telling you how I feel they're going to report. I mean, I'm just looking here. It's a PayPal, LVS is reporting, Tesla's reporting, Xilinx. I mean, I have a huge fly on manure grin on my face because um, not to sound cocky or conceited, like I'm gonna crush it. Like I'm just trying to be realistic here. I'm not trying to come from a weird place. Twitter's reporting all these great companies, Triple M, and there's so much more that I didn't even mention to you guys yet, and you might be wondering like, there's really more than that, Mr. Melnick? Yeah, you got Gilead, First Solar. Um, the list just Visa, the list just keeps going on. All right. So you're flooded. There's all these earnings names reporting. Is there something that I could do, Mark, which would help me capitalize on these names? Now, if you've been watching any of my videos, I've been actually showing you videos how I set up, how I track the earnings names intraday, how I go ahead and do it. I try to spell it out as best as I can. I will honestly admit there is no substitute for being in the room. I'll do as much as I can for you not being in the room, but if you want to hear me call out in real time something I'm looking to buy before I buy it, imagine there's a $304 stock and it's going down a little to 303.90 and 303.70. And I tell you guys that I have a market order on $300 puts like this. And I'm just sitting there with my finger on the $300 puts right there. And if it breaks 302.42, I'm going to go ahead and click that button and buy those puts. That's the advantage that you will not be having by listening to the show. However, I will do everything I can to bring you maximum value because I do want you to make money. I do want you to make money. Do I have an invested interest in you making money? Um, yes and no. The vast majority of Newsbeat Live members already signed up for the annual. I continue to work hard because I deeply care. People sign up for this service because I deeply care about the users. I deeply care about the community. We're going to have a group coaching session after this ends, which is obviously a private thing. But let's just go right into the earnings analysis and let me show you exactly what we're thinking. By we're, I mean me, of course. Let me show you guys exactly what I am thinking here. So on Monday, there's not a lot of companies reporting in which I can analyze. So the companies that I'm offering you here, in terms of the ones I picked, are the ones that I have some form of fundamental conviction on. These tend to be companies that show forward projections as opposed to hiding them, you know. So on Monday, between Monday morning and Monday after the close, which is tomorrow, the only name I saw that made sense was, maybe TD Ameritrade, which, recently did the $0 commission things. I dare not analyze TD Ameritrade because how would they project future revenues? It's going to be like hard. What are they going to really say? Are they going to say we're going to get decimated because of $0 commissions? Or are they going to go ahead and just play it down and say we're going to get more money and things? And I don't think they have the answer to that. And as well as Logitech, being an ex-professional gamer, I have a Logitech mouse. You see that little G right there. I have a Logitech keyboard. I have a G910 keyboard. I love Logitech products. My favorite thing about Logitech products are actually that they break, and that means people are going to go out and buy more. So I think that's good for the company. But let's go into the names that I can analyze. And we're going to start off, ladies and gentlemen, with the old Biogen IDEC, now known as Biogen Incorporated. I have this thing where, like, is it just me out there, or when you see like an old symbol with an old name, like you call it by the old name, like AVGO used to be called Avago, now it's called Broadcom, and I still call AVGO Avago. Like, be honest, how many of you guys call Google instead? It's not Google, it's Alphabet Incorporated. And it's like, no, that's Google. How many people still call names by their old school names? I do. So anyway, Biogen, very beaten up name. I'll just take you even to a weekly here to show you. I mean, the stock has just been in pound town, just getting absolutely just destroyed, just pounded upon. And I want to say fundamentally, I am actually bullish. I am actually bullish on this name. I think they're going to continue to raise their revenues. I think this stock is going to be positive. I think the earnings are going to be positive. And I want to point out something else, like, because something weird happened recently in the room, and I'll share with you. Just because I'm positive on it doesn't mean the stock's going to gap up or down or sideways. I mean, I know anything can happen, but I'm not even predicting that. This is more of a fundamental look. And then I'm going to give you the strategies for how I'm going to trade it. So with the names I'm showing you, to me, it's so easy to make money on these earnings names the day of trading compared to actually just trying to randomly guess where they'll gap up or down. I mean, I don't. I want to stay away from the 43-57 paradigm, and the truth is, I can't do better than 57% just randomly picking earnings names. I'll gap up or down. I think I was 61% last earnings season, but if I can't do over 70, I'm not even. I'm not even going to go near that thing. So I want to point that out as well. I'm not taking positions, prior to the report on Tuesday in these names, but a lot of people like it. A lot of people do it. If I were to do it, I'll tell you the names that I would do, but I'm actually going to show you how I'm going to trade it and crush it, regardless if they gap up, down, or sideways. So Biogen, they're going to, the consensus was that, they're going to report about $29, 28 to $29 a share. They raised their fiscal year 2019 earnings per share to 31.50 to 32.30. Now, why is that a big deal for me? It's a big deal for me because you have a stock that Wall Street doesn't appreciate that is raising earnings. To me, that means a lot because you have to realize this stock came from a high of $480. The stock is trading at 220 right now. I mean, here's a weekly chart, definitely getting pounded. On the daily chart, absolutely no love even for the run into earnings here. I think Biogen is going to be very bullish on earnings. Moving on along, we're going to take a look at Harley Davidson, the old HOG, which has been running up into earnings. Now, here's the thing, and I'm going to share my fundamental analysis with the earnings as well. Here's the thing. on Harley Davidson. So they did announce, on their last quarter, which was right over here on July 23rd, they gapped it down on earnings in which I thought was bullish. I remember being bullish into HOG earnings on July 22nd. For whatever reason, they gapped it down to $1.28, only to explode it all the way back up higher. And then it suddenly made sense to me. You could see that crazy green bullish engulfing candle right there. So on HOG earnings right here, they reduced back on July 23rd. They cut their fiscal year 2019 shipment view to 212,000 to 217,000 vehicles, and that was from the consensus, their consensus, not just analyst consensus, the company's consensus. So that means a lot to me when the company says it. From 217,000 to 222,000. So they basically said 217 to 222, and then they lowered it to 212 to 217, right? So, um, kind of weird. The CEO said that he expects U.S. retail sales improving in the second half of 2019. And he says the profit margins are going to recover in fiscal year 20 with fixed European Union tariffs. And, that sort of throws me off for a loop because the CEO made a very, very vast assumption that people would be willing to trade, buy a new Harley Davidson with the extra tariffs at all. The truth is, taxes do destroy the buying power. That's why I'm gonna walk. I'll just spoil you right now. When I do it tomorrow, I'm gonna be bearish on eBay, and I'm bearish on eBay. And I stopped ordering a lot of stuff on Amazon. My wife still does it, but like I stopped ordering a lot of things on Amazon. I still order a lot from Amazon, but I would say I cut out like 30% of it, and I cut out like 95% of my eBay sales because they're all subject to tax. It's like, oh, look, there's something on eBay that I could buy for $100, and it's like, no, now it's like $108.45, and I'm like, what? And it literally turns into such a turnoff with these taxes, these internet taxes that I just step away. And granted, it depends on what state you live. Like I'm in New Jersey right now, so and it also goes on in New York and whatnot. And there's a different tax in every state, but it's like the way eBay does it really pisses me off. So like if I go buy something on eBay, like it's kind of funny. Like it doesn't even matter what it is. Let's say it's some some nerdy magic cards right here. I'll just show you it. Like I'll show you like why this pisses me off and why I'm going to be bearish on eBay earnings as a result. Like okay. So let's say I wanted to go like right over here and I wanted to buy a nerdy box of magic cards for $184 and I click, add to cart. It's like, okay, look, you could add this to cart. And I'm like, okay, cool. 183.99, same price. I click go to cart. And then all of a sudden it's like, what the living expletive word is this? Estimated tax? $16.33. Like all of a sudden now it's $200.32. That sounds a lot different than $183.99. And that is just a major turnoff. And I did it like that. You know what happens a lot of the time too? Like you click buy it now, for example. There's no way I'm going to buy this thing. And it like already like goes to like a weird window and stuff. I'm not a fan of that. I mean, $16, that's like what off a $180 purchase? That's a lot. That's like just under 10%. Just under 10%. So like it's annoying. And the point I'm making here for Harley Davidson is nobody wants to pay these expletive tariffs on the bikes. If they're going in, I don't know what these tariffs even equal, but I could tell you extra taxes piss me off to the point where I don't buy this stuff anymore. And it's not that I can or cannot afford it. It's just disgusting. It's just to the point where I just lose interest. It's not about being able to afford it. I'm sure everyone here, for example, can just in stupid analogical terms, can afford a $25 slice of pizza. Doesn't mean you want to buy the damn thing. You see what I'm saying? That's the analogy here. As a result, my eBay spending is like, you know, I don't want to make a bad Boeing plane analogy, but it's basically like this. It's nosediving towards the ground. I'm sure other people feel the same way as me. Harley Davidson, with this EU tariff, CEO assumes that because the EU tariffs are fixed and are not going to be increasing, like Chinese tariffs have a higher chance of increasing, obviously. CEO believes that that's it. Like, okay, that's it. It's just people are going to be buying these bikes. I could not disagree more. I think Harley Davidson earnings are going to suck. I'm giving this one 2 thumbs down. 2 thumbs down on Harley Davidson. Next one is Hasbro. Speaking of nerdy Magic the Gathering products, let's take a look at Hasbro right here. And this is interesting because Hasbro, they own Magic the Gathering, and again, very big part of their sales, very big part of their business. I have my own Magic cards here. Very nerdy stuff. Thank God I'm already married, otherwise I would never score a date. Admitting that. But let's just take a look right here. I think their earnings are going to be great. Their overall inventory decline, they last reported on July 23rd. Now, here's the thing. Everybody knows that video game things are huge. Have any of you guys ever heard of MTG Arena? And I'm going to show you something there, and it just came out between the last earnings and now, and this is why I feel Hasbro is going to be phenomenal on their earnings. Nobody is talking about it right now. I'm logging into the game. I'm going to show you how they're going to monetize. It's a free to download game. It's free to play. Check it out. You go to the store and you could buy, let me move my face here. You could buy things, $100 to buy 20,000 gems. I mean, I don't buy anything from this store, but people do. And if you look on YouTube, there's a whole, this game is exploding right now. Nobody wants to talk about it, but Hasbro is actually going to be, Hasbro officially broke into the online e-gaming space. Everybody knows of Activision. They bought out Blizzard, which owns the StarCraft, Warcraft, Overwatch, all the other great enterprises. People know Electronic Arts. They know Take-Two Interactive. People are very familiar with these gaming sites. Not one of you out there would have said that Hasbro is going to be one of the top gaming sites out there. And you could buy gems, you could buy packs. So this is what you could do with the gems that you buy. They basically cost money. So you come here and you literally buy these gems. You buy these gems, and people are just literally like clicking it in. They're waiting for the server, and you click it, and bang, you just click PayPal. It's like so quick, and you're basically in. You're basically in. And it's so easy to buy something and, waste your money on these video games. And let me tell you, in a game like Magic the Gathering is a pay to win game. You want to have the best deck, you want to have the best cards, you have to drop money or play like a stupid number of hours a day, which most people, professionals, are not willing to do. I'm a professional. I don't have time to sit there and play stupid video games my entire life. I do make time for stupid video games in which I love, but I don't have time for it. I'm a professional. So for me, I'm very likely, I probably dropped like 40, $50 on it already, but that's not even what I'm talking about. Like, I know people who drop like 4 or 5 grand on the game within like, and it's brand new. I mean, literally, this game is going to be reflected in the new earnings report, yet they talked nothing about this game in the prior earnings report because it's that new. It was in the beta phases. And even in the beta phases, they were charging money and making money. It's sick. It's absolutely sick. Magic the Gathering products are selling out. They're pumping them out. People are buying the crap out of them. I don't want to go into, nerd talk 101 here again, but I'm telling you, Hasbro's earnings are going to be phenomenal. They're going to be phenomenal because no analyst out there, nobody, not one of the analysts out there spoke about it, with the exception of actually, no, actually a couple did. Barclays analyst, D.A. Davidson analyst, Barclays and D.A. Davidson analyst, Linda Bolton from D.A. Davidson, and Felicia Hendricks. What a coincidence. Two female analysts. Women are not just better traders than men, they're better analysts than men. Congratulations to those two women. They are spot on. Linda Bolton, $138 target from 120. She put on July 24th. And Felicia Hendricks, 130 target from 115. Of course, none of the guys noted Magic the Gathering as anything big, but you're going to see it, ladies and gentlemen. Magic the Gathering is going to take that company to the next level. As a result, I'm giving Hasbro two very big thumbs up. Next is Lockheed Martin. Lockheed Martin loves when there's discontent in the world, when, you know, when the U.S. has been ramping up its military. The U.S. has been ramping up its military phenomenally large. They've been winning contracts left and right between their last earnings report. Well, what kind of contracts, Mr. Melnick? Well, on October 16th, earlier last week, they were awarded $108 million from the Air Force for Mk-21 ARVs. They were awarded $40 million from the U.S. Army on October 15th, $163.9 million on October 2nd, $494 million from the Navy on September 30th. These are contracts they won after their last earnings report reported. So between their earnings coming up this Tuesday will be inclusive of this. $113.25 million Navy contract September 27th. On September 27th, they also got a $281 million contract and another $150.5 million contract. That totals about $560 million for September 27th, rounding off. They on September 26th, they authorized a $1 billion share repurchase program. They raised their quarterly dividend since the last earnings report on September 26th to $2.40 from $2.20. They were awarded another $281 million contract, another $352 million contract, another $266 million contract, another $327 million contract, a $2.43 billion Navy contract since the last earnings report. Do you see where I'm getting with this? It's stupid amounts of money. It's obnoxious. $176 million contract, $240 million contract. These are contracts since, that came after their last earnings report. That's inclusive in the one that we're talking about. I'm not just spitting them out for all time, all right? $405 million contract, $320 million contract, $315 million contract, $800 million contract. That's it. I didn't do all the math there. But it's billions and billions and billions. What was that? $10 billion that I spit out at you? 8 billion, 9 billion. They are just getting contracts up the wazoo. They're going to raise their future guidance, in my humble opinion. They're going to beat analyst expectations because not one analyst there would have been able to predict those sort of contracts all coming through. I don't care who you are. Play the lottery if you can predict that stuff. Don't even look at Lockheed Martin. None of the analysts were able to predict it. Wall Street is going to be taken by surprise. Lockheed Martin is going to, expletive word, crush it on earnings. 2 thumbs up. No thoughts on McDonald's, by the way. They reported really good same-store sales. They're reporting Tuesday as well. I have no opinion on this, and that's because McDonald's doesn't want to give future earnings. Still, I look at McDonald's and obviously one of the most phenomenal stories of all time. I mean, back in 1984, this was a $2.48 stock, and that's with, all these silly splits coming in, so they were in the penny range. And it's just one of the most magical success stories ever. It's nothing that I would ever be long-term bearish on at this point, but I will tell you, with all these restaurants and all these people eating healthier than before, like even the fact that you could sell an unhealthy piece of chemically concocted manufactured garbage like a Beyond Burger or an Impossible Burger, and people are biting it up because they're so health conscious that their stupidity overlaps their common sense for actually what they're eating. It makes you stop and wonder how many of these people actually want to still go to McDonald's. Who wants to go to McDonald's and eat? Now, You're talking to a person who in high school, when they had the 99-cent Big Macs, would go with $8. I would go to the counter with $8. I would buy 5 Big Macs, a large fries, and a soda, all 99 cents. And with the tax and everything, $8 would more than cover it. And I used to sit there and I gorged myself like a Harley Davidson, like a hog. I used to eat this food. It's absolutely delicious, absolutely disgusting for you, absolutely unhealthy for you. You ever see the movie Super Size Me? So I will say here on McDonald's, um, I'm a little bit curious to see how they're going to report. I mean, they always increase same-store sales. I am so skeptical. This is a monthly chart of it. I could go back to the daily. I am so skeptical here of McDonald's for how they're going to report. I wouldn't go long or short it into the report here, but I really don't know. And that's why I didn't cover it within the list of names. But you're going to want to hear the next one I'm going to talk about here. So I went over Biogen. I went over Harley Davidson. I went over Hasbro. I went over Lockheed Martin. And last but not least, this is going to be a good one, which is going to definitely worth talking about, is UPS. And I was looking at my phone today to see an advertisement from UPS. UPS, obviously, and I've never seen this in my entire life, but UPS actually has a marketing program to hire drivers. The thing was earn 1,900 and something dollars per paycheck, and that's what they actually advertised as. I guess it's bi-monthly, I'm assuming, as a UPS driver. I guess they make like 45 to 50 grand a year, something like that, which, they're advertising for. Definitely a solid job for somebody who's not working. And if you want to drive a truck all day and, work wee hours of the night or day or whatever. But I've never seen UPS actually advertise before. That's actually not the reason why I feel the way that I'm about to tell you of how I feel about it. So let's just go right back to it here. UPS, they're going to beat. I know FedEx has been getting, such a bad rap here. To be honest, I think this is the name you buy. This is the name you buy because FedEx is getting so destroyed. So destroyed. I mean, don't take, here's a weekly of FedEx. You could just see stock hit $274 earlier this year. Would you believe me if I told you that FedEx was trading at $274 in January of this year? Would you believe that? Since then, it plummeted to 137. It closed right around 150, 149.91. So the stock pretty much hit about 275 and now is trading at 150. I mean, wow. Now, everybody was so concerned that Amazon was going to hire a fleet of people who are going to deliver your packages for you, and that is just going to destroy FedEx's business. And even the US Post Office, which was vying so hard for Amazon's business, was giving them a rate so expletive cheap that they were actually losing money because that's just how powerful Amazon's business is. It's so powerful that you would even lose money by doing business with them, which of course makes no damn sense. Do not underestimate companies that will deliver your packages online. Yes, online. You're buying stuff. Yeah, you know what FedEx is not delivering? The letter you sent to your sweetheart while you were in the trenches in a war. This is not, honey, it's day 232. I miss you. How is everything? I'm sitting here eating beans out of a can, you know. Like, this is not the Pony Express. This company does deliver things. And going back to UPS, they're going to crush it on earnings. And I think a lot of people are surprised to hear me say that. A lot of people might be surprised to hear me say that I feel that UPS is going to crush it on earnings. They reaffirmed the fiscal year 2019 adjusted earnings per share view of 745 to 775 a share. The consensus was 745. So according to the company, on their lowest end estimates, they're going to come within consensus range. Like in the worst case scenario, we meet your expectations. Um, they're talking about how they grew profits across all business segments, said the CFO. They said their performance was driven by the efficiencies created by investments in our network, the success of ongoing initiatives, and our ability to execute in an ever changing environment. Let me change that to English. We found cheaper ways to deliver your products, and there's more people opening up online businesses selling their goods, and they're using us as well to sell those goods. That's all they're saying. They're executing strategies to reduce um, aircraft fees. Oil is still stupidly cheap. I think it's an exciting time in UPS. I think it's really exciting. They launched a new international shipping service called UPS Worldwide Economy. Their sales, you ready? With a global cross-border e-commerce, their sales are expected to reach a trillion. Yes, I used the big T word by 2020. That's according to the company. $1 trillion in value by 2020. I think these companies are severely underestimated. People still need to use these companies. No matter what you do or do not sell online, you will be using UPS. All-time high on UPS is 135.53. Markets are near all-time highs still. People still need this service. I'm giving UPS 2 thumbs up. So just give you guys a brief overview. Now I'm going to tell you how I'm going to be trading these names. Then we'll do our group coaching session after this in the Newsbeat live room. But just a wrap up here, and then I'm going to tell you. Actually, let me just tell you right now. Then I'll wrap up the names at the end. Um, so how am I going to trade these names? I think that's a very fair question. I'm going to be watching names. Like, I want you to keep in mind, even though I have no opinion on where Logitech or Procter and Gamble and McDonald's can gap, I am looking to trade those names. They are major large cap names, obviously. So I am looking to trade them. So what I want to show you is just the 2 5-minute strategies that I'm going to use. Again, I did a video literally explaining how I'm going to trade earnings season, but I'd like to go over it again in case any of you guys missed it. And if you did miss it, it's within top of T3 Live's playlist. Definitely take a look at it. Um, so first thing I'm going to do is, just using the 5-minute strategies here, which I'll go over again, is the VWAP reversal strategy. And it's 81.5% effective for me for the month of September 2019. And again, if you're sitting there saying, Mark, I like strategies that are back tested, 3 years or 4 years. And if you say that, unfortunately, you don't really know what you're asking for, because there are a lot of strategies. For example, I'll explain why. That would have been my initial thought process. If you used a strategy, for example, that worked 6 months ago but didn't work for the last 3 months, would you want to do that today? Would you want to execute upon that strategy? What if it worked 90% of the time, less, 12 months ago, and those numbers are making making the hit rate look artificially high, even though if you tried it today, they would be a lot lower. Is that a strategy you would want to do? And of course, the answer is no. That is why when I back test, I really believe on what's working now, because what worked last week is likely to work tomorrow. That is the key. So it's very simple. Choose an earnings names that gaps. And this example I use down. Wait for a 5-minute bar to close below the VWAP. And to close up. So you're basically, when a name gaps up, you're waiting it for it to close. But I'll explain it in English. It'll be easier to understand. It's 81.5% effective. And then I'll show you the VWAP reversal I caught last week in Netflix. So if a name gaps up and then a 5-minute bar closes below the VWAP, you basically short through the next 5-minute bar break to the downside. The next 5-minute bar that breaks after the fact that it closes below the VWAP, you short through. And I'll show you exactly. It's 81.5% effective, and you can make your day literally instantly. So I'm just showing you right now a 5-minute chart of Netflix. Here's a 5-minute chart of Netflix from Thursday, October 17th. You could see the name gapped up here, put in a bar. This orange line here is my VWAP. It's standard on TC2000 and freestockcharts.com, what I'm using here to judge my VWAP. And you can see right over here, the stock closed at 303.07, $303.07. And the VWAP, if you look on that left-hand side, that box in orange, it says 305.77. So this is the first 5-minute bar that closed below the VWAP. All I simply did was short right through the bottom here. We actually shorted through 302.40. If you're in the room, you would have heard that. And it went from 302.40s to $300.30. Now I know what you're thinking. $2.10. Let's just round it down, just say $2, on Netflix, Mark. How much can I really make with, making $2 in Netflix? Well, I'll explain. If you took, and my standard default now is 200. A lot of times I put it down to 100 contracts per trade, but even on a 50 trade contract on Netflix, those puts moved. Those $300 puts moved. And I was able to catch over $1 in them. I was able to catch over $1 of them. So you might be sitting there with a small account thinking, if you haven't watched our small account video, how to make money on a small account video, kindly watch these videos because it really connects everything together in which we're talking about. And I'm going to show you exactly why I'm pulling such a high P&L based on cost basis is because I'm actually doing what I preach. I'm actually doing what I preach. And it's working. And it's not just working for me, it's working for hundreds and hundreds and hundreds of people around us. So, like, for example, here, if you go ahead and you just go to, if you just go to like T3's website here, you go to the video section on Facebook, and these are all over YouTube as well. I'm saying on the Facebook side, and actually T3 Live's YouTube should have this as well. We did Newsbeat trading hacks. We show you Newsbeat show number 449, how to truly be successful with a small trading account, how to use TC2000 for consistency. We talk about how to size your positions properly. This is just a talk on pot stocks long term. Fundamentally, I'm not bullish on them. How to get over trading anger. This is a talk of Beyond Meat. How to trade the entire earnings season ahead. How to make 1,000 to 5,000 per month trading with a small trading account. And if you're following us, since I've done those videos, I was able to turn a cost basis of 444,000 into 487,000, $44,000. In English, you don't really need a lot of money to make a lot of money comparatively when you're doing these option strategies. And people are like, it's funny, and there are a lot of people, most of us in the room are trading common stock and are shorting Netflix, just so we're clear. But like in a Netflix here, like if you just simply like the 295 puts, for example, those things went from like $2 to like $3 on that move. And it was insane. I mean, they moved like 50% in value. And if you put $10,000 or took 50 contracts, and this was an expensive one, a lot of times it's like you don't even need that much. But if you had $10,000 in buying power and you had options access, you could just buy 50 of those puts and they would have gone up $1. And again, I'm not even saying that you would catch it. And if you want to know what that means, your $10,000 would be worth $15,000. And I know you're probably so used to people telling you that options are riskier than stock. I couldn't disagree more. I mean, with options, you really know what you're losing. If I buy $2,000 worth of options, the most I'm going to lose just buying straight calls or puts is $2,000. When people buy 500 shares of Apple at $200, it's $236, but they have $100,000 of buying power on the line. They could think that they're losing a certain amount of money. They could think it, but the truth is they don't know, and it causes a lot of psychological toxicity. And while $100,000 of stock is generally, as a general rule of thumb, less risky than $100,000 in options. The point is you don't need $100,000 in options, and you'll probably make a ton more than somebody who has $100,000 in stock. That's the beautiful thing about options. So we simply shorted right here, and I really don't care that it dropped all the way down here. I mean, if you held, $10,000 worth of those puts I talked about, and you wrote it down here, you'd probably be up close to $80 to $100,000. And I don't even want to insinuate that that's what you are doing. I'm not going to be one of those Captain Hindsight gurus who tell you what you could have done. No, I actually just want you to focus on this. 5-minute chart, just these candles right here. I don't care what happens afterwards. Yes, I know it plummeted and it would have worked. And a lot of times we leave a small run around, but you're not holding 100% of your position for that nonsense. You're shorting it right here at 302. You're looking for a move through day lows. It broke, it hit, you're up money, you close out. That made my day right here. I'm a 20-year trading veteran who's traded only stock religiously for 15 of those years. My only regret is I didn't start options earlier. But yes, there are people trading stock doing well. You know where stock is really good? If you're on a prop account. Because a lot of prop accounts are very iffy about trading options and whatnot. Just use that. Like for me personally, if I was prop, which I am not, I would just slam the living out of my buying power into these things, is what I personally do. I can't legally tell you what to do, but that's the benefit of prop. And I'm just telling you, with like little moves like this, you might be looking like, what can you really make with a little $2 drop in Netflix? And when you're dealing with a Netflix, the answer is as much money as humanly possible. So that is one strategy I'm going to be doing. I'm going to be doing the VWAP reversal. Again, just wait for, if the name gaps up, wait for a 5-minute bar to close below the VWAP in this case, and then short through the next 5-minute break. And again, this is not me holding it down, like riding this wave down. That's not even me. That's not even my strength. You're speaking to someone who's made millions and millions and millions of dollars trading options, ladies and gentlemen. That's not even me. That's not me. And there's a million great option strategies that do so many different things. I just buy straight calls and puts. I keep it simple and stupid. I'm actually an options imbecile. That's the funny thing. People think, oh, Mark, he's such a great options trader. Am I? I don't even understand options. I don't even know what alpha, beta, theta, weta, you made a grade a trader. I don't even know what that means. I don't even know what that means. Somebody told me like theta, I think, is time value, and I have a brief understanding that options expire earlier on Friday and the value goes down quicker. It's like a ticking time bomb. I get that, but like people are like, options are so complicated, and I'm like, no, it isn't. I just trade it as if it were a common stock. All right, instead of shorting Netflix, I just bought puts. But which puts, Mark? Doesn't matter. I don't care if they were the 305 puts, the 302.50s, the 300s, the 297 and a halves, the 295s, the 292 and a halves. Who gives an expletive word here? Who cares? They all went up in money. Which one were you in? I just don't go. I just try not to be like a complete and total, imbecile on them. Like for example, so if Netflix is at $300 and I'm buying puts, I'm not buying the $240 puts. Mark, they were 1 cent. I bought them for 1 cent and they didn't move after your stock dropped $2. Yeah. Try to be within, as long as you just have a little bit of logic there, you can never fail. And if you're inside the room, I'm spelling it out exactly what I'm looking at. And at the end of the day, to me, the option, all it is a bid and offer, just like the common stock looks like. You see, there's a line of bids, there's a line of offers. Generally, as a general rule of thumb, when you buy the calls and the stock goes up, your options go up. And as a general rule of thumb, when you buy the puts and the stock goes down, your options go up in money as well, and vice versa, right? Just like it would a common stock. That's how I trade options. It's no secret. It's no secret that I am an options imbecile. Okay. But maybe I'm not an imbecile, right? Maybe I'm doing exactly what I should doing because I'm producing the numbers and the consistency that again will blow the panties off any firm that I drop it with, right? So maybe I'm not that stupid, but maybe ignorance is bliss. Maybe ignorance is bliss. And I'm not even saying it's a smart thing. When people ask me like, where should I learn options? I'm like, oh, it's all over the internet. Read on it. Like CBOE, Chicago Board of Options Exchange, gives you like free education on what an option is, how the definition, investability. Google it. I'm showing you strategies, algorithmic strategies to make money. I'm just using options as an avenue to exploit the movement, right? So what is the other thing I do? Well, the other 5-minute strategy I have, ladies and gentlemen, is the Mark 5. And I just showed you VWAP reversal. Huh. Good job, Mark. Why is it coming up like that? Can I pull up the Mark 5? Where is that? There we go. So, the Mark 5 is a pretty simple strategy. I spell it out here. And again, if you want to really want to take advantage and understand it, I did an entire video, but I'm going to show you a Mark 5 strategy that I did again last week. And of course, it was on State Street, Sam Tango Tango. And here is State Street here. And basically, I just want the 5-minute bar to pop up, pull back, and the next time it breaks up, as long as the exponential 8 and VWAP are below you, I bought it. And the target was day highs here. We actually bought right here through, what was it, 60-80s. We basically bought in near the 60-80 range. We had a target of day highs to break 61.84, and it did. And this is a Mark 5 strategy that we did in real time. And we were very stubborn with this one too, because we understand the psychology of we're having an earnings call. And we knew the CEO was going to be very bullish on the earnings call, even though I've never met or talked to the CEO of this company, because his numbers were good and they were going to sit there and have him speak. And we knew he was going to speak bullishly. As a result of that, it was the most logical psychological conclusion for a human being to talk like that, and the stock just started ripping up. And if you were in some of the 62.5 calls, some people were buying the 62.5 calls on this day at 12 cents. Hundreds of them are going off. That was like almost the entire volume early on in State Street was the Newsbeat live room. It's funny, look at the weekly 62.5 calls. Almost all of that volume were members of our room buying it. The weekly 62.5 calls. The stock went to 63.5 bucks. Those calls were well over $1. It actually went a little higher here, 63.64. The stock went to 63.77. But just to give you an example of what a 12-cent option, and somebody in the room was actually buying them at 9 cents. Let's even use 10 cents just for mathematical purposes. You know what it's like to take a $1,000 risk on 10-cent options? You get to buy 100 of them. You could buy 100 option calls at $1,000 of a 10-cent option of the name we are watching that day. And again, I'm not sitting here cherry picking like this was our main focus on Friday if you were in the room. I'm talking like this in front of thousands of people. This is not any big, but Mark, there was a million other. No, this is, if you're in the room, you knew this was the setup we were looking for. And just to keep you, just to give you an idea, your $1,000 worth of options could have been worth well over $13,000 by this point. When it hit 63.77, about 13 grand, maybe a little more, about the same. And even over here, these calls were going for 50 cents. They were going for 50 cents. Over here they were going for 50 cents. So even at this point, a $1,000 bet, you would have been up 4 grand. So when people come with these really small trading accounts and people out there are telling them about you need to trade common stock, it's auto fail. Like what are you going to do? And then of course you have the penny stock services out there, And I guess mathematically that makes more sense to make money on a penny stock. You'll probably have the guru of the room shorting the crap or buying the crap out of it before you get the 2 cents heads up on it. He's going to drop the heads up on you. The stock is going to move 5 or 10 or 15 cents initially, and the guru just cleaned house. Is that what you're looking for? Is that the kind of trading service you're looking for? Or those are the type of trades you're looking for? If so, good luck. That is not what I do here. That is not what I do here. I focus on multi-billion-dollar large cap companies. And if you were in the room on Friday, it was almost magical. We're sitting here saying the Qs are going to bottom here, the spiders are going to top out here, this is going to bottom out here, J&J is going to bottom out here, Facebook is going to bottom out here, and we're just everything we touched just like worked. It was like magical. It almost seems too good to be true. But if you were in the room, you would have experienced it. And the funny thing is, you don't even have to do any of that. One of these trades, one of these trades that I'm showing you is enough to make your day. I bought Roku 130 calls at dead low at $1.57, calling it to pop, and those things went to around 250 within 10 minutes, from $1.50 to 250 when we called the bottom of Roku on Friday. Now, eventually the stock actually went lower. We were so out of the position. Up money. These are just things that we do. So back to the Mark V strategy, buying through here, being stubborn and holding because we called out to be a little more stubborn on this one and to hold it past the conference call, and it worked. And look, I didn't hold my share, my six. I went with the 62.5 November calls, by the way. I didn't hold my 62.5 calls all the way up here. I don't care. I just got a little move here through day highs. Bye-bye. Day over. Goodbye. You want to know what consistency looks like? It's not sitting there and slamming your face against the keyboard 24/7. It's actually executing upon consistent strategies. You want to know why Newsbeat Live members have the highest Sharpe ratio in the industry? You want to know why so many Newsbeat Live members can get easily funded from top tier firms by just walking in with a printout of their track record? You want to know why? Because this is how we trade. This is what we do. This is how we trade. This is how we take advantage of these things. This is how we bring the average common Joe trader, whether your name is Joe or not, it's irrelevant. It's more like I guess, John and John Doe, Jane Doe, maybe an average John. My middle name is Jonathan, okay? Makes it even easier. So, like, this is how an average John or Jane Doe trader trades. This is how we take advantage of the algorithms. This is how we take advantage of Wall Street. Consistency. Get out of the 43 to 57 paradigm. You want to be that trader that sits around and trades all day because you see a bunch of traders in an office around you bleeding and hemorrhaging out their accounts? Maybe that person next to you bleeding and hemorrhaging out has a father that's worth $150 million. And at the end of the day, even though he does care about making money, he really doesn't give a crap because his life isn't going to change whether he makes it or lose. Maybe trading is more about the trades you don't take as opposed to the trades you do take. Maybe trading is not supposed to be the most stressful job on the planet. Maybe trading is actually a happy job. Maybe you can be just another Newsbeat Live story. When I read some of the comments that are coming in, people are I wouldn't say abusing my numbers, but they're beating them like hand over fist. And I'm like, holy, you know what? Do you know what it's like to be inside a room where the guru is not the best trader in the room? Join our room. You'll see that I am not P&L wise, maybe I'm top 50, but I am not the most consistent trader in the room. And I'm not the most profitable trader in the room. And there are hundreds and hundreds of traders that are finding success every single day. Even it's magical. And what am I going to do now? Because how many traders are not finding success? I'm going to do a group coaching session in my room right now. And I'm going to focus in on problems that individuals are having so I can help tweak them and get them to that next level. You want my algorithmic trend lines for tomorrow? Here are the algorithmic trend lines for tomorrow, October 21st. You can go ahead and screenshot them. Do you want to actually watch me trade and you're not a member of the room? Links in the description for all my services, but nonetheless, I hope I brought you value through this video. Whether you join or not, trading is a happy place. Hence why I always say, happy trading, make money. And we'll see you guys tomorrow on the Newsbeat Live trading broadcast. Have a wonderful evening.